directional price movement, both A would be long and once again B would be short. And let us not forget that you have to have a way to be able to validate the public buyer and seller together and what their combination of the two immune systems equal net out between the two of them, so you know exactly, do I need to stay long or do I need to start getting short? Do I need to start being a seller? All of these kinds of things that the public model is very fashionable and challenged about. But you don't have to be fashionable and challenged about, or challenged in any way. You don't have to have any emotion. It's strong. That's what has to happen. We break higher, equities go, MMTs. I will show a 60-minute chart as well of the Dow. MMTs, let it be known that this is a 60-minute chart. How do you like that? In your platform. The most important thing is, how does one decipher that price action momentum between the public? That's the public transaction model. We are going to populate the delta lines so that we have a clear picture as to how they should be. Bam. See? This is a double bottom 1/4 delta price action line. And basically, it confirmed it. So when we look at a 60-minute NASDAQ chart, we look at that gap down that started back on February 22nd over in here. There was that weekend. But look at the amount of 60-minute bars that kept going down. That meant that every single day that any leadership in the NASDAQ 100 had bounced up, it was a sell short automatically because this 60-minute NASDAQ chart was weak. That meant that you had to be a short seller on a bigger percentage-based level, MMTs, than going long, meaning that your momentum off the bottom was diminished in price action in the platform and then immediately sell short. You can see the depth of these 60-minute reversal bars, and even at these particular lines here, let's fire up these gauges. Watch them. They're popping. So let's get some diamond alerts. At that double bottom 1/4 delta price action, what's starting it with the gap that holds higher, that's momentum. And it's taken out a big piece of that gap down ratio, negative ratio gap down to the bottom, versus that gap up ratio, which we will come to a conclusion between the two price action movements as to what the immune system between buyer and seller ratio is. On a 60-minute, this half action bar at 2792.65 is going to be a challenge. The current one, these were the two biggest reversal bars, not counting that third one. We already took that one out with the gap. That's that one. However, we're going to work with the fact that each one of these lines are 9.41 on the NASDAQ comp. And what we're going to be looking for is that this trend ratio high is over here, and that this particular needle right here in the gauge is over to the far left and just holding there. You know that they're strong if that's the case. The other thing about it is that the trend ratio low gauge will be in the positive side and or very diminished on the negative side, like right to there. But then you bounce and start running that way, you know you got to get net long using that gauge. And if this gauge right here is staying over there above 85 and 90 for a longer time, and you can confirm that in your daily IR line and your 60-minute IR line, whatever time frame you're on. But really, this is breaking it down into that 3-minute level all the time. Doesn't matter. But you just want to know that when everything is working that way, that momentum is built in. So, on that one there, 2792.65, and NASDAQ closed at 27.81. That's on the 60-minute half bar right there. on Monday. If we go up and we start to slide the bid like this and the ratio reverses and starts to go down in value here, then we start selling short. It's that simple there. On the NASDAQ comp, 3-minute chart is going to be behind here. It does make moves off the bottom on the 3-minute that will warn you. That's called delta expansion on the NASDAQ comp 3-minute. Look at that. Isn't that beautiful? And I bet you that TQQQ bull was going right along with it. So when that strength is there, that's when it's net long on equities that are leadership only now. If they're not leadership, you got no business making a market, because the leadership has a better price action volume. And there's that bottom move. It burned a clutch. And guess what it did? On a 3-minute level, it took down its 3, 6, 9 weak teeny line reversal. Bam! Took them down another 1, 2, 3 teenies at $2.35 per line to the teeny action buy line. Look at that buy line. IR reversal. Oh my goodness, look at those. Know what they mean. That's strength. Okay, so that's what a 3-minute looks like. So you can look at it on the intraday level, but remember that 60-minute and that daily and whatnot are going to be the most important.